So let's talk a little bit about some encumbrance journal entries for the general fund. So if you recall from chapter 3, we talked about booking, right? And it had that what 5 years ago would have been a funny mnemonic, the Bay mnemonic, right? So we're going to budget. We're going to record our budget, all those estimated accounts, estimated revenues, appropriations, all that good stuff. Then we're going to record the activity, the financial activities, so things like expenditures, liabilities, all those kinds of accounts. And then we are going to record any encumbrances that we have. We're going to record encumbrances. We're going to unencumber. There's all kinds of fun stuff that we do with encumbrances. So in chapter 4, we're going to have a closer discussion about closing out those accounts, right? So remember, closing out accounts, we're going to close accounts that are temporary. So typically speaking, it's going to be revenues, expenditures here in the government side of things. So the example that we're going to look at takes place in the Brownville School District, and they're going to give us a set of facts. Hopefully you have your notes in front of you. If you don't, pause this video, take a minute to go grab your notes, get them in front of you so that you have the facts. You have the set of facts in front of you, and you can easily make these journal entries, right? So we're going to focus with this problem on recording encumbrances. We saw this first in chapter 3 and we went over it. I told you guys these can be some of the more confusing journal entries that we do in this class. So we're going to get some practice in with them. So the first journal entry A, it tells us that the district had outstanding encumbrances of $11,200 for band instruments from the previous year. It also tells us that it's the district's policy to reestablish those encumbrances the next year. So essentially what happens is at the end of the year, if they haven't received those goods, so in this case, they didn't get band instruments that they had encumbered $11,200 for, so they're going to close that encumbrance account, and then at the beginning of the next year, they're going to reopen it, reestablish it exactly the same as it was. And that is for purposes of creating the financial statements. That $11,200 has to go back somewhere so that it presents accurately on the financial statements. But once the financial statements are completed and sent out, we will then reopen those encumbrance accounts. So we will debit encumbrances control for the prior year. We'll make a note there that these are for the prior year in the amount of $11,200. We're still waiting on those band instruments. And then we will credit or increase that budgetary fund balance reserved for encumbrances account by the same amount. So in description B, journal entry 2, it tells us that the district ordered textbooks at an estimated cost of $57,000. So in governmental and not-for-profit accounting, when you see, particularly on the governmental side, when you see that word ordered or placed in order, has invoices for things like that, you know you're going to be encumbering some money, okay? Because when do we make the encumbrance entry? When do we record that encumbrance? Well, it's as soon as the order is placed, right? We don't wait for the goods to come in. We place that encumbrance, we record that encumbrance as soon as the order is placed. So here we know that they've ordered textbooks, the order's been placed. We know triggers in our head, we need to create an encumbrance, we need to record an encumbrance here. So we're going to simply debit encumbrances control. Now, this is the control account, obviously, so this is going to be the general ledger level account. You could have encumbrances for textbooks, and that would be part of your subsidiary ledger, right? So we're going to record that for $57,000. We are also going to credit that budgetary fund balance reserved for encumbrances account. We're going to increase that for $57,000. These are just telling us we've got a hold on this money. It has been encumbered to be used for a specific purpose. In this case, textbooks. We have we have a paperweight on that money, right? So journal entry 3 tells us that band instruments arrived with an invoice price of $10,900 plus $290 in shipping. We'll just add those together. That's the total cost, $11,190. So journal entry C1, we're just going to reverse that encumbrance. We're going to unencumber the money from journal entry 1 or description A. but we need to unencumber it at the estimated cost. It is very, very important that when you are unencumbering funds, you unencumber at the estimated cost, not the actual cost. We'll record the expenditure at actual cost in the second journal entry here. So we're going to reverse the first journal entry. Okay, and it simply is a reversal. The credit becomes the debit and the debit becomes the credit. So we're going to debit that budgetary fund balance to decrease it for the estimated amount. Remember, when we're unencumbering, we unencumber at the estimated amount. Very important that you do that. And we're going to credit the encumbrances control account for the prior year for the same amount, that estimated amount, that $11,200, right? Now you'll see we didn't actually spend that much. What we actually spent was $11,190. And since it didn't tell us that we paid it in cash or anything like that, we're going to assume we used credit, so we're going to credit that accounts payable account to increase it. So this expenditures control, this journal entry C2, this is the activity that's actually going to go on the financial statements, right? The encumbrances don't show up on the financial statements, just the actual activity, okay? So hopefully this journal entry makes sense. If it does not, please contact me and I will walk you through it if you need me to. So journal entry D here. They tell us that textbooks originally estimated to cost $49,000 were received with an invoice price of $48,500. The remaining portion of the order is back ordered. So what this tells us is of the $57,000 that we encumbered for textbooks, we received an estimated $49,000 worth of those goods. The other $8,000 is still in order. We haven't received it. So when we unencumber this, which is the first thing we're going to have to do is unencumber these funds, we're only going to unencumber the estimated $49,000, what we actually received, right? So, they may do that by the number of books that you received. Say, each book costs $5.70 and you received $49,000 worth of those books. That was your estimated cost, right? So we're going to unencumber $49,000 of that. Same thing. It's just going to be a reverse of that original encumbrance entry. We're going to debit the budgetary fund balance reserved for encumbrances account to decrease it by $49,000, that estimated cost. And then we're going to credit encumbrance control for the same amount, that $49,000, which was the estimated cost. And then simply have an expense. The expenditures control account is going to be that $48,500, which is what we actually paid for it. And again, there were no keywords telling us that we paid cash, so we assume that we used accounts payable to pay for that. So again, a little bit of a confusing journal entry, but if you just remember that you have to unencumber the estimated amount, you'll be fine. But if you do have questions, please contact me. Again, always happy to walk you guys through these things. So journal entry E, we signed a contract with a CPA to provide the annual audit in the amount of $5,200. Now, this one could go one of two ways. I could see where you would want to just, debit expenditures, credit cash for this because it's a small amount of money. It's really not material enough for us to want to encumber. But in this instance, they do want us to walk through an encumbrance journal entry again. So we're going to debit encumbrance control for $5,200. We're going to credit that budgetary fund balance reserved for encumbrances for the same amount. Now, like I said, this could have went the other way where we simply debited an expenditure and credited the cash. But fear not, I will let you know when you need to encumber something or when you need to just expenditure something, right? There are a lot of factors that go into do we use an expenditure or do we use an encumbrance system for this? That may be, obviously the dollar amount, the size of the governmental entity that is going to be paying this. There's all kinds of things. There may be restrictions. There may be statutes for the entity that says, hey, anything over $6,000 has to be encumbered. All kinds of different factors that go into that. But in this class, I will tell you if you need to encumber something.